Hello everyone. Today I'm gonna continue with the part 2 of the stock market basics. So I would request you guys, if you haven't watched the part 1 of this basics the stock market, please do watch it before you watch this one. So let's continue. So we were talking about the types of stock. So there are two types of stock basically. So one is the income stock and second is the growth stock. So what income stock is? Income stock, when you buy that stock, it will pay you dividend. So there are company which who pays monthly dividend, and there are companies who pays quarterly, and there are companies who pays twice a year. So it depends how they're paying it. So that's how you can earn it. Plus they also grow as time goes on. They're making profit, or they're acquiring different business, or they're coming up with a new product. Second is the growth stock. Growth stock, they don't pay the dividend, but few of them pays it. But because why they're not paying is because they are reinvesting their profit in the business only. So that's how they are growing their product, and so the value of the stock goes high because they are reinvesting the profit in the business. And if you have to make the profit, you can sell the stock and you can earn the profit. So owners of the growth stock are interested in making money through capital gain. So if like I said, if you have to make profit, then you can sell it after some time, and you can earn that profit. That we call it as capital gain. We'll talk later about this capital gain. So the second is, what is ownership of a company? So stock represent basically the ownership in a publicly traded company. When you buy a company stock, you become a part owner of the company. So for example, if a company has 100 shares and you buy one of them, you own 1% of the company. So I can share you one story back when I was starting the trading. So when I bought this, I was so excited. I was like, oh, I'm the owner of I'm a bit owner of part of the Google because I own the stock, or I'm a smaller owner of Microsoft because I own their stock. Yes, but I don't have that power to put the decision, because the controlling shares owning 50% of the company stock, this person controls the companies. But yeah, you can enjoy the success of that company which you're owning. You're having the stock of that company. So that's how. So making ownership decisions. So common stockholders are voting owners of the company, but most people own such a small percent of the company share they do not wish to vote on company's decision. If you are buying a stock in a brokerage from the brokerage firm like Robinhood or the Fidelity, you will get an email from them saying that the earnings or quarterly earnings are coming up this week or this month. So these are the board of directors, if whom you want to vote. If you are studying the financial statements, then you can vote for them. But you are not be fully involved in that meeting. But yes, you can vote for them because you are kind of as the ownership of that company. So where are stocks traded? So stocks are traded in different areas, like the exchanges, markets where business buy and sell. Most the industrialized nations have one. The US has several. In the US, the two largest are the New York Stock Exchange. It's also known as the Wall Street, which represent the oldest and the largest co-ops in the country. Second is the Nasdaq in Chicago, represent the newer companies. So how are stocks traded? So stocks are basically traded with the stockbroker. They are the licensed intermediate between buyers and sellers of the stock. And second is brokerage firms, business which specializes in trading stocks. Like we have the Robinhood or the Webull. These are the brokerage firms. And the second is day traders, stock brokers who buy and sell large amount of stocks very quickly to turn a profit in one day's trading. So you're buying it today and you're selling it today only. So we call it as day traders. Get it? Just hit the comment if you have any doubt I'll I'll make sure to reply each and every one. So when you enter in this stock markets, you got to, I mean, you'll be hearing these words, bulls and bears market. So what bull is, like I said, bulls have their have their head upward. So that's how, um, I mean, the stock market, if the stock market is going up, it means it's a bull market. And if the stock market is going down, we call it as the bear market, because the bear's head is down, but the bull's head is always up. So, I mean, that's how it is defined in the terms. This is the cool picture in the Wall Street, New York. If you ever visit New York, then you'll see this picture. You can have a click there that now you are trading in the stock market. It would be nice. I mean, it felt nice that you're the part of the good companies. So you can also look the performance of the stock market, but there's so many companies out there in the market, so you cannot look at every stocks. So it would be hard. So there's some kind of indexes which can show you the whole picture, like how the stock market is going in all. So with thousands of publicly owned corporations selling billions of shares of stock, it is impossible to keep track of how the market is doing as a whole. So stock performance indexes are used to look at the part of the stock market to make a generalization about the market as a whole. So two stock performance indexes are Dow. Famous ones is Dow Jones Industrial Averages. Dow is an index that shows how 30 companies in various industries change in value from day to day. And we have S&P 500. S&P 500 is an index that tracks the performance of 500 different companies, different stocks. By watching this index, we can tell if it is a bull or a bear market and when to invest or not. Thank you everyone. Thanks a lot if you're making it this point. Please like, share and subscribe my channel to support. I assure you that you'll truly be benefiting from my videos, and you'll get to know how the US markets are working. And also US market is very much be owned by different countries market also. I mean, in different countries they own some of the US market. So if you are knowing about how the US market is going on, then you can have a clear picture in which stock you have to invest in and what's the current thing going on, like in the EV market or the cryptocurrencies. They're booming here in US. So eventually they'll be coming in your countries if you're watching from different countries. I'm currently in US, so that's why I'm saying if you're in different countries, then you can look at the market of US, how it's going, and that's how you can make your decision to invest and where to invest. So you'll be kind of ahead of all the peoples in your country. Thank you so much. Thank you.